Today I want to be covering a few important points regarding the US market and then comparing it to the Brent and the gas oil and the heating oil crack. And I want to also talk about the situation with Putin and the US and China. And the first thing that I looked at today was the 10-year treasury yield. Now, from what we're looking at, it's currently about to hit 4%. This has been showing extreme volatility like we haven't seen for a while. And a few weeks ago, the Feds they came out saying we're going to be taking a more dovish approach. And from the looks of it, um, the market is going to be pricing in 25 basis points for the next three meetings. But some people believe that a 50 basis point hike is still on the table, and some people are debating even a 75 basis point hike. Um, but from what I mentioned, these 25 basis points hikes for the next three meetings is going to be the worst case scenario because it seems like the market needs a 50 basis point hike to lower down the yield curve. Um, I feel like maybe if the Feds take a more dovish approach in tomorrow's Fed's minutes, we're going to be seeing the bond prices rally and the yield curve going down. Okay. The next thing I looked at, okay, was the ultra bond March contract. Okay. I mean, 133. I mean, come on, this is very low. Last week we saw it hitting 144, 143, 144 around that range. Now it's hitting 133. This is extremely low, and the Feds now could possibly come up with a more surprising approach and possibly give the market a 50 basis point hike. And, you know, this indication with the ultra bond allows them not to follow the data. If the Feds would follow the data, then they would get something above 144 on the ultra bond from my perspective. And the NASDAQ was quite low today. Yesterday, it steadied. And this is inflation. The market is pricing in what's going on with the January CPI. This is I believe for some people they think that it's expected, um, but you never know with the Biden administration. We never know. The market could go down. The bond prices could go down tomorrow, depending on whether the Fed minutes are hawkish or dovish. And let's wait for the FOMC meeting on Thursday as well. And we also, we saw the Brent being affected with these news as well. Now let's look at the situation with China, Russia, and the U.S. So the U.S. earlier, today on February 21st, we saw the U.S. saying China are arming Russia with weapons to supply them and so forth. Then a Chinese state official came out saying, "Hey, no, we're not supplying them with anything," and he's denouncing it. But suddenly, okay, you see Biden making a surprise visit to Ukraine, and then Putin coming out with a speech hinting World War III. Now that affected the market during Putin's speech. We saw the Brent suddenly go from 83.2 or $83.3 to 84 something. It did spike up during the day, and then it went down. Um, prior to that meeting, it went down, and I feel like the market is kind of staying steadying at the 83 $84 range for the Brent. We're seeing something similar with the gas oil being between 790 to 810 around that range. Um, but the market is currently steadying, in my opinion, um, up until if we're gonna wait for the EIA report. Anything prior to the EIA report could affect the market. If, let's say, we get more crude stockpiles, if we have something like that, then the market is going to be significantly affected. And tomorrow with the Fed minutes as well, with the EIA report is going to be very volatile, guys. Let's keep out on the lookout on that, and I'll update you guys on the next video.